we have got Toni Hunter, who, if you have, again, been to any of the landlord seminars that Maxine has put on in the past, you will know from George Hay Accountants. And Toni is an expert in the property field and obviously is going to talk to us today about that lovely subject of taxation.
I am indeed.
Excellent. Well, first of all, Toni, thank you so much for taking the time out, because I know we were just talking. You've had 2 meetings, you've got another meeting afterwards. It's just not stopping. I love it when people say, like, oh, are you back in the office? And I'm thinking, I haven't stopped.
No, it's definitely busier.
Well, just to sort of do what we're going to do today, rather than do a presentation from me or Toni, the idea today is, well, we asked you last week if you could pop in some questions about property tax. And I've got to say, Toni, you're obviously far more popular than me because we've got loads of questions. And, you know, For me, it's like, yeah, where are they?
There's nothing like an accountant without their timesheet, is there?
Oh my God! Right. Well, we better talk quickly then.
Quick, everyone.
That's it. Quick. So first of all, something that comes up on every single seminar we have, and it's always a topic, and people ask, it's about this thing of really, should you manage your portfolio as a company or individuals? So, Toni, can I ask you, with the portfolio that I have, is it better to manage it as a limited company, or is it better to do it as individual landlords?
You're right, we get asked this question an awful lot. And and the answer doesn't change. It still is, it depends. And the age-old answer.
There you go, timesheet's going.
I know, absolutely. And the reason for that is because the decision shouldn't be about tax. It should be about what you want from your portfolio, what your long-term goals are, whether you need income stream from it, how you've acquired the properties in the first place. There's lots and lots to consider. And so I don't see that just because we are in a strange time dealing with a pandemic, that actually has changed at all. We may see some change in house prices and things like that, which may then give you the impetus to look at the decision you've made again, and perhaps to speak to your accountant about whether the strategy you have in place is the right one for you. But really, that's something we should be doing periodically anyway. So no, I don't see that anything has changed, and I don't see that there is a right or wrong time to be making these decisions or transferring the properties to a limited company. But to give you an answer, just to be fair and get things on the way, most of the people I speak to about this, we do lots of maths and then we come up with a very similar answer. And that generally is that if you have properties in a portfolio already, just leave them be. But if you're planning to acquire new ones, or you're planning to change the direction of travel in terms of how you buy them, renovate them, let them, whether it's a long-term tax planning that's at stake, whatever the case may be, we quite often start the new project with a limited company.
Oh, okay, because there's always this thing about capital gains tax, and sort of, you know, from that point of view, do I pay it through a company? Do I pay it through myself? What's sure. Best for me? And I suppose a little bit, that's a bit like we're seeing what the Treasury is going to do in 5 years' time.
Yeah, so when we were stockpiling on toilet rolls, we forgot to buy our crystal balls. And we just don't know what is going to happen. But what we do know is that we want something from our portfolios in time to come. So whether that be a pension income, whether that be inheritance for our kids, whatever, we need to make that decision and we need to drive it forward. And what will be with the economy and taxes, quite frankly. Okay. The biggest hurdle with capital gains tax and stamp duty and things like that is the transactional side of property. So if we try and get properties from our personal portfolios into a limited company, that is a transaction. And so unless we can demonstrate some really clear criteria about our property being a business rather than an investment vehicle, then we're going to struggle and we're going to pay lots in conveyancing costs, remortgaging costs, stamp duty and capital gains tax. So it all has to be planned out quite a way in advance.
Right. Okay. Well, no, thank you for that, because I know it's one of these ones that people think it's very sexy. Oh, I must do this, and then you think, well, is that the right thing for you? But I know you've helped a number of our landlords, because we've sent them in your direction to actually sit down and go through that. So I know you're happy to do that. So thank you very
absolutely. Just because we're not in the office doesn't mean we're not here. And if
much.
somebody, so if anybody wants to sit on a system like this and work through what their plans are, I'm happy to be a sounding board.
Okay, so anyone there, if you've got anything like that you want to find out a little bit more, you can email me at maxine.lester@maxinelester.co.uk. And Toni, what's your email that is best for you?
Toni, TONI.hunter@georgehay, all one word, .co.uk.
And of course, you can message us on the group,
on Facebook,
on Facebook, and we can pass all those messages on. I've just put a little call out as well for any other questions, so that if there's anybody that's watching now that's got some questions, then get them into us.
Thank you very much. So I'm going to go on to my first question, which is from Jane. Now, she's let me give you the full details, so I'm not declaring anything. She lived in her property for about 10 years, but then moved out, and she's now renting it. She's been renting it for around about 18 months, and she's now thinking of selling. So we've gone through the basis of, well, actually, is this the right time to sell? Because it's a bit of a weird market. But from an accounting point of view, what would you be advising her?
Well, unfortunately, there's not a lot that can be done retrospectively. The same with a lot of taxes. If you don't plan in advance, there's not a lot that can be done. And we have had a lot of changes in the past few years regarding capital gains tax in particular, when it comes to selling a property that you haven't lived in for the whole time that you've owned it. So really, the advice is to do the maths before you make any decisions. Perhaps seek some help. But the maths, to be fair, isn't particularly difficult. You're looking at the proposed sale price less the costs that you incurred when you acquired the property, including any renovation costs or anything you did along the way of capital nature. So not your general day-to-day costs. They've been dealt with as part of income tax. But certainly if you put a new roof on, if you built a garage, anything like that, that can be included in the cost. So the difference between sales price and the purchase price is effectively, in broad terms, the gain that you've made. Now, in times gone by, you did get allowances for what we call PPR, Principal Private Residence Relief. Okay, and this was an allowance to say that it does still say actually that if you lived in the property as your principal residence, you didn't have to pay capital gains on that proportion, and it was a time prorated exercise. So in Jane's case, you said that she had lived there for 10 years. So let's say she owned it for 13 years. She would have 10 years free of tax and 3 years that could be taxed. Okay. And prior to April 18, those 3 years were allowed to be deemed as occupation. But recently that was reduced to 18 months and now it's gone down again to just 9 months. So Jane needs to be careful that she's not going to have a tax bill that she wasn't expecting because it was her home.
Oh, right. So actually, all right, hindsight, crystal ball, if anything, she shouldn't have rented it out, but waited rented out for 6 months, but basically got rid at 9 months then. Possibly.
But in that time, the market could have gone up. And so she's gained from it. She's obviously had the rental income in that time. So it's not a clear-cut yes or no answer to that. It depends on what she wanted from the property at the time. And of course, if we're paying tax on something, that means we've made profit. So it's just a burden that comes with making money.
Damn, they get you anyway.
I know. One of the other key changes that's quite recent that is going to hurt is the loss of lettings relief.
Right.
Lettings relief was an allowance that was calculated, and the maximum you could get was £40,000 per owner of the property. So if you're a married couple owning a let property, that was actually worth £80,000 to you. It's not as simple as that. There's lots of criteria, but in principle, it could have been anything up to 80,000. That has gone, unless you co-occupied the property with your tenant. So if, like a lodger situation,
Oh, right.
rent a room, something like that, because that's what it was intended when lettings relief came about. But the legislation wasn't written particularly well, and so we all claimed it. Now they've gone, hang on a minute, we've had enough now.
They rewrote.
If it's not lettings relief if you didn't let part of your property and you occupied the rest of it. And so a lot of capital gains tax will start arising now because we've had an increase in property prices. We don't have as much PPR as we did, and we don't have lettings relief. So
Right.
if you have lived in your property during any time of ownership, then both of those reliefs would apply to you. You need to be careful because they may not now.
So also just to ask, is it the ownership or the landlords? Because obviously we set up an agreement and we'll have the named landlord. So if the property is owned by 2 people, but there's only one landlord on there.
Yeah, it depends on what's on the title deed usually. That's where the tax office will go to as default. But there should, if it's anything different to what's on the title, then there will be a deed in place to identify who owns the underlying capital, i.e. the share of the value in the property.
Okie dokie. Well, I think that's cleared that one up.
Yes, yeah, not easy, not good news.
Not easy. Number of people were actually asking this. It's really about legislation. And from my point of view, we've had a load of legislation and it's coming in again and again and again. What's happening on the accounting side of things?
Okay, we managed to squeeze in a budget seminar just before we went into lockdown. And then
Well done.
I know, literally, I think it's the Friday before. We had some people there attending, and we didn't socially distance particularly well, but at the time, we were still wondering what was happening and whether we needed to do anything. So that was early March. The budget was the 11th of March. Since then, as you say, we've had information bombarded at us from pretty much every day from the government. But fortunately for property owners, there isn't much change that's relevant. So we can refer back to our property taxation guide that you'll find on our website. If you look at that, the budget summary is downloadable for free from our website. Most of that sticks. Really, everything that's been added since is been literally about COVID. So, so how about you? Has your legislation changed the world we live in?
Well, we had the tenant fee ban that was on Monday. That came to an end because that was been drawing to an end there. And we were speaking about that in last week's update because I was just saying, if you haven't sorted yourself out, if you're managing it yourself, be careful because you could have a £5,000 fine coming your way. So hopefully no one's there. No one had to worry from our point of view, but we've got the electrical certificates, electrical safety certificates coming up. So that's from the 1st of July. So it's any new tenancy has to have an electrical safety certificate now. But by July 2021, then every tenancy has to. So
and how's that working with electricians being able to get into people's houses to check these things?
With difficulty. I mean, from what we've said to our contractors, it's very much, they go in only if the person is happy for them to be there. We do say to the people in the property, look, just most probably it's best to go out. Our guys will come PPE'd, but if you go out, if you are worried in any way, shape or form, then just tell us because we won't do anything. I mean, at least we do have until next year, but on the basis there's something like 6 million rental properties. I think electricians are going to be rather busy over the next couple of months, just getting it through. But
I wonder. Sorry, Jane, are you saying something?
We could all become electricians. All those people that jobs to go back to should become electricians.
Well, after the last recession, when the building industry did start to slow quite dramatically, a lot of tradesmen did start working in the domestic market. So we may have an influx of plumbers, electricians, carpenters. We'll see what happens. But I was going to say, Maxine, I wonder if we moved the clock back to February and we used the term PPE'd, whether we would, any of us would actually know.
What? No, that's a very good point. I mean, it has changed quickly, so quickly, and it is a bit weird to start with. I mean, when we go and do viewings now, we do the protection and, as I say, keep the distance. But, you know, bless people with glasses, they're steaming up, so they can't see the house. So we've got to, it's a new world and we're dealing with it. So, so that's it. So coming back to you then, question, actually quite a topical one from Linda. She was saying there's various forms of government support for trading business dealing with COVID. And is there anything out there to help landlords?
Okay, well, most of the support, other than the furlough grants, which were specifically to help retain jobs, most of the support is for business. So we really need to understand whether we are running a business when we're landlords or whether we're investing. And that is a very big grey area that is tested in court. It's not necessarily a checklist to get the right answer. Okay. So when we're looking at whether we run a business or not, we're looking at how active we are in making business decisions. So if you have bought just a couple of properties, you are using someone like yourself to let them to manage them day to day. And so you have some long-term plans for them, but you're not actively trading as someone who's supplying property, then it's arguably you're not in business, you are actually an investor.
Right.
And when it comes to what we were speaking about right at the start of this conversation about transferring properties into a limited company, that becomes really crucial, because if you want incorporation relief, which effectively says I'm moving my business into a limited company, I'm not moving property into a limited company, then you have to be really clear about how active you are. And really, you've got to be looking at 5+ properties. You've got to be spending a good 20% of your time actively managing. You've got to perhaps have a finance team, or maybe someone collecting rents. There's no hard and fast rule, but you have to demonstrate that you are trading, you're not just investing. Okay, so that said, there are a couple of things that landlords can look at if they are struggling with the situation we're in regarding COVID. But first, I would ask, do you really need support? Is your tenant still paying? Maxine, I believe most tenants are. There are some that have asked for a little bit of a delay, some that have asked for a small discount short term, but generally speaking, they're paying, aren't they?
Yeah, no, you've seen the COVID sheet that we've got, all 70 lines of it. So the details that we're getting down. And it's really said, I suppose it came out after the first 3 weeks, that 90% of people, actually 95% of people were absolutely okay. Yep. There was a small percentage in the early days that they really didn't know what was going on, because there were lots of things sweeties being thrown out, but it's like, oh, did it apply to me? And I suppose it took around about 2 months for the self-employed to find out, okay, so I'm not here, so I've got to apply for that. So they were a little bit behind the game, but then that's come in place. Sure. So we found all through, everybody wants to pay their rent, which again was, from the point of view, the press was saying people aren't going to pay their rent, blah, blah, blah. Well, if you've got a mortgage to a property, you pay for your home. If you got the rent, you pay for your home. So to me, it's still exactly the same thing. And people have that attitude. But I mean, touch wood, absolutely fine. As said before, I think the next headwind we've got will be in August. And the reason being, that's when the furlough payments start coming back to the business owner. So then that's when decisions are going to be made. Okay, I'll put you on furlough, but actually, do I want to pay the money now to keep you? We will see. Yeah,
I'm sure there are plenty of people out there, unfortunately, who are on furlough and actually they are going to be made redundant. They just don't know it yet, which is a really sad situation, but it's where we're at. Now, if we do have problems with receiving rent and therefore you've got commitments as a landlord that you need to cover, the help that you can get is really about cash flow. It's not going to be grants. Okay, so the first port of call is your mortgage lender. you need to speak to them, because if you're going to struggle to pay or you need a bit of breathing space, then speaking to them and being proactive is going to set you in good stead. They are in general offering mortgage payment holidays, like the credit card companies are, like your bank overdraft are. Most lenders across the board are offering payment holidays, and that does extend to buy-to-let mortgages. But just be warned, it is a capital holiday. It's not a full repayment holiday. The interest will still be due, and they will still continue to accrue interest on the bit you didn't pay. So I just be careful that that actually still falls in line with your overall strategy, because obviously if you're 3 months or so without paying your mortgage and you expected to have paid your mortgage off by the time you retire, you're no longer going to be in sync with your personal strategy on what you wanted from your property. The other thing to discuss when you speak to the lender about the capital repayment holidays is whether it's going to affect your credit score, your credit rating, because we all know as landlords that getting a good deal on mortgages is getting harder and harder. Although the interest rates are low, the criteria is getting more and more stringent. So we really need to keep our powder dry. And so make sure that if you do take advantage of a capital repayment holiday, you know the consequences in terms of cash flow and future lending.
Is it likely? I mean, is that a thing that, so if they offer you a holiday on something and you take it without checking, is it likely that affects you?
There's been quite a lot of press about people having their credit score reduced as a result of taking holidays. A lot of the banks have said no, that won't be the case, but it still happened. So I think it's something the FCA have really cracked down on, and it shouldn't happen. But just be sure, just make sure you ask that question.
You wouldn't even think, well, yeah. I would have to even ask about it.
Because you've had permission to have the break from your holiday, you haven't defaulted. So why should you have a problem? But I have seen stories and people following up on those press articles, with the commentary underneath, and it clearly has affected them.
So just checking if they have taken anything. Oh, hello, Max. You joined us again. What happened?
Yeah, I decided to go and love technology. Ignore it.
Knock out for a bit. She was very interested in that answer, Toni, obviously.
Yeah, well.
Yeah. You like trying to read the notes in case she didn't come back. Like, what's the next question? But it's fine. She's back.
She's back. So the other couple of COVID-related points that I wanted to raise on this was partly the furlough scheme. We've mentioned it was there to save jobs. If you are running your property portfolio as a business, generally through a limited company, then as an officer, as a director, you are an employee. So you are perfectly entitled to furlough yourself. So you have exactly. So you have a director's meeting.
Oh God.
make sure you have a director's meeting with yourself first, won't you?
Right,
and then you break the bad news to your employee, yourself, that actually there's not enough work for you and therefore you should be furloughed. But be careful, because the scheme is there to protect your job. It's not there to be abused. You do need to have reduced prove that the workload is reducing. And whilst you're on furlough, you mustn't work. And the minimum term for furlough is about 3 weeks. But 3 weeks on furlough will be worth about £500 to you. So definitely worth talking to your accountant about. It does work if you are in that sort of situation where, for example, Maxine is managing your property for you. You probably can afford to leave it for a couple of months without actively being involved in your company. So
yeah. I'll take your contact details, by the way, on the Facebook link.
Okay.
Now, so that if anyone is in that situation, they can ask you. But
the reason I mention it now is because the furlough scheme has just changed. They've just announced the changes. And if you want to take this, the last possible time you can furlough yourself is the 10th of June. So not far away. So if you are a director of a limited company, your limited company, speak to somebody.
Get out there quickly.
And the other question that seems quite prevalent when it comes to COVID support is whether bounce back loans are relevant to property owners. And again,
Because that's
Again,
come
this
up
is
a
about
couple of
business.
times.
It does. And there's, again, forums about it, and the banks have had their own view on it. And again, it's about whether you're trading. If you are in business and you have suffered as a result of COVID, so your tenants aren't paying, then why not? Why wouldn't you? You're no different to anybody else who's trading. If you're just a passive investor, if you've just got one or two properties, then I think that's probably pushing the integrity of the scheme a little bit too far. But if you've got several properties and you do treat it as a business, then the bounce back loan should be available.
And only if your tenants have defaulted, though. Not
if you have to show that you're adversely affected.
Okay.
But to be fair, the application form is really simple, so you don't have to go into lots of detail on that. Also, don't forget that the bounce back scheme funds have to be used appropriately. So don't get a loan and then just use it to pay off a credit card or to buy yourself a caravan because you can't go abroad at the minute or something like that. It has to be used for the property business that is being borrowed against. So think about the proper purpose of those funds. And finally, be warned that if you don't operate your property portfolio through a proper business bank account, you've just got a little savings account separately, or it just goes into your normal current account, then you are going to fall at the first hurdle, because the banks require you to have a business bank account that is mainly used for the business before you can make a claim for this loan. And just for those of you who don't know what a business bounce back loan is, it's up to 50,000. It's 25% of turnover. There's no repayments in the first year. And then when repayments are due, interest is charged at a miserly 2.5%. So for unsecured lending, it's really, really good value. But is it appropriate to businesses like ours? That's for you to decide. I would say, are you sure you need it? Are you sure you are adversely affected?
Yeah, I'd say sort of like for you to decide, but then you to give guidance, you as in Toni to give guidance, because that really is, all these schemes sound amazing. Let's get the money here, let's get the money there.
Question that's come in from Caroline Favell. So you cannot work in the business, this is regarding the furloughing yourself.
Yes.
Business workload reducing. Are you allowed to work a few hours in the business each week? Or none?
As of the 1st of July, there will be a part-time option, but until then, so obviously we've got to get this in before the 10th of June, there is no working at all in your employment role. However, you are allowed to do your director's duties because they are company law related, they're not employment related. So for example, dealing with your accounts with your accountant is a director's duty. Therefore, you could continue to pay suppliers, you could continue to file your tax return, that sort of thing. But you're not allowed to do anything in the business. So no being on Facebook promoting your services. No, exactly, because that is trade, that is business. No dealing with the maintenance, no project management, nothing like that. Be very clear that it's director's duties only if you're on furlough.
Yeah, okay. And then we've got one more question from John. Well, actually, it was John and there were a number of others. And really, he said, we're all going to have to pay for this hit on our economy for many years. And property investors have already been targeted for the past few years. What do you think will happen to property taxes in the short term? I know it's another crystal ball one. Sorry, really Toni.
It's okay. And but I agree with John. I think increases in taxation are inevitable. Where I think there are easy wins for the government, our corporation tax rate is one of the lowest, if not the lowest in Europe, and hasn't been this low in the time I've been working in an accountancy. So I think there's a possibility we may see an increase there. So that will affect those of us that do use limited companies. The dividend tax rate at the minute, so for when you actually extract profits from your limited company, you'll pay dividend tax personally. That's at a very awkward 7.5% basic or 32.5% if you're a high rate taxpayer. That doesn't really roll off the tongue, does it? I could easily see that being rounded up to 10% and 35 or even 40%. I think they're quick wins. SDLT, who knows? Crikey, what a complicated tax that is. It keeps changing all the time. It's getting more and more convoluted all the time. And I think complexity means the general public won't treat it as a vote winner. And so they could change that. We've seen a tax on capital gains tax already in terms of our PPR allowance and our lettings relief being removed. Again, that rate doesn't really fit in with the rest of the tax system. If you sell a property at the moment, you'll be paying 18% or 28%, depending if you're a basic or high rate taxpayer. So you can see the potential there for that to be increased. So it's not looking like good news. And then, of course, we have the grim reality that COVID does cause an increase in the death rate. And as much as we like to plan for our demise at some point in the future, I think we all have to take a long, hard look at our finances, our wills, our inheritance tax planning, because this doesn't discriminate. It's not just the elderly and the vulnerable. We have seen cases of it hurting families that seem fit and well. So, so please do look at your will. Make sure that if you've thought about a company that the company's mentioned, if you've got properties, that it's really clear about where the ownership of the property is going to go. Just make sure, just a sanity check. And I know it's not a nice thing to do. None of us wanted to write a will, and I'm sure none of us want to read our will. But please do. Please do. And I'm not a will writer. I'm not interested in will writing. But it's where people then come to us as tax advisors and say, this is what I want. And the will is the first point in making sure that your wishes are actioned. And of course,
would you direct someone to write the will if you help them with their?
We can refer. Most people do have someone they know or a lawyer. But yeah, we've got a contact base if people need it. At this stage, it's just that reality check that we need. And I think also in terms of tax and the future, the nil rate band, the amount of inheritance tax where you pay at 0% has stayed the same for a really long time. And yet our wealth and inflation and our assets are going up all the time. So in effect, we are paying more tax by freezing that nil rate band. It's what we call fiscal drag. And so I can see the opportunity for the government just to keep that limit where it stands for the foreseeable future. So if we are lucky enough to be in a position where our wealth is growing and that sort of thing, we can't assume that the bands of tax are going to follow that.
No, but I suppose in some respects, as a landlord, it really is a case you're doing it for the long term. Your assets are increasing. You're most probably doing it for a pension pass on to the kids. So you're in for a long game. And in the long game, there are ups and there are downs. Absolutely.
But the message here is not to wait for the long game to be nearly over before you find an exit strategy. If the kids are your intention, then let's look at trusts. Let's look at ways that perhaps we can gift some of the property. It depends on it depends on your strategy. Like we said right at the beginning of this, it depends. Yes. What do you need from it? What's your personal life situation? Are you drawing income? Is there a mortgage involved? All of those things need to be factored in. And with inheritance tax, it hurts. It's big numbers. 40%. 40% is massive.
Okay.
And the worst thing about that 40% is that you can plan against it, and people don't.
Yeah. And that you must get so frustrated when you come across that.
I pass that to our tax partner, who seems to revel in solving those problems.
Okay. Have we got any more questions, Jane, at all?
No, nothing else at all at the moment, unless anyone else wants to bring something in. I'm just looking now. I'm just writing that I absolutely loved that phrase that you just said, Toni. Don't wait for the long term to be nearly over before you plan your exit strategy. I mean, that's got to be like in quotes, isn't it? So many people just like, oh gosh, if only I knew. How far in advance should you be doing that? Is it 7 years or something, or what?
For an inheritance tax, 7 years is the sort of the panacea. But for any taxes, really, you're looking more than 5 years, really. whether that be because you're in business and you want to exit and retire, whether that be for trusts, estate planning, whatever. If you don't give us 5 years, we have options, but they're going to be limited.
Okay. Well, thank you again so much for your time. Really, really appreciate it. Every time I talk to you, I know you know about tax, don't you?
when it comes to properties, I have a vested interest.
Yes. You are a knowledgeable individual. So thanks for giving that knowledge.
Really interesting, and I hate anything like that at all. And I found it fascinating. So thank you as well.
Yeah, don't be frightened of taxes. At the end of the day, if we've paid taxes, we've done well. We've earned money, and I think we've got far more to worry about than tax right now. We need to think about what we want from our properties, and we need to think about what's going to happen to the economy, and making sure that we keep in touch with professionals like Maxine to keep us informed about what's going to happen. Not that any of us have got crystal balls, but being in touch with the marketplace and thinking about who we are as landlords and investors, not necessarily worrying about saving tax at every step of the way.
Yeah. No, oh, thank you for that. Well, on that note, we'll draw it to an end. If you do have any questions, then you, as I said, you could either message us, leave something on Facebook. You could speak to Toni at email again.
Toni.hunter@georgehay.co.uk, or our office number is 01480 426 500.
Fantastic. And then next week, as Toni said, we won't be looking as a crystal ball with regard to what's happening in the rental market, but now we've got the figures for May, so I'll be able to give you some factual figures of what's gone on, and then a feel for what we think is going to happen over the next couple of months. So
excellent.
Look forward to seeing you then, and thank you for joining us this afternoon. Toni, thank you. Jane, thank you for being there, and we'll see you next week.
You're very welcome. Bye.
Bye-bye.